CNBC TV 18, celebrating 16 years of business leadership.
Hello and welcome to Taking Stock on CNBC TV 18. I'm EKTA BATRA. With me is REEMA Tendulkar, and this week turned out to be good despite the fact that it was Christmas week, so volumes were on the lower side, but we did manage to notch up gains of around 1% for the Nifty, Bank Nifty and Mid-Cap Index didn't do too badly either.
Yes, indeed, 1% gains for this week at least. Last week we gained close to about 2%, which means in 2 weeks the Nifty's rallied 250 points from levels of 76.10. But next week we've got the expiry session to contend with as we wrap up 2015. So we'll discuss this with our guests. Let me introduce Jyotivardhan Jaipuria, an independent market expert, and Sukhani of S2 Analytics. Hi, and thanks so much for joining in. Jyoti, let me start with you. 2015 has not been a great year. We've largely consolidated negative returns. What's the outlook looking for 2016 now?
So I think 2016 will be a better year than what 2015 was. 2015 was like the year of consolidation in some sense, because we had a great 2014 and markets were consolidating after that, waiting for earnings to really pick up. I think next year could be better, but it could be a little more back-ended year than a front-ended year, so we may see a lot of the returns coming in the second half. I think in the second half, what we'll see next year is basically the recovery starting to show in numbers, and earnings probably not disappointing the way they have been for the last, God knows, 5-6 years.
Okay, Jyoti, you know, one of the key things which are over in December is the Fed overhang. They have hiked rates, and hence that uncertainty is over. And we've seen FII flows sort of come back into the market. Yes, they're not robust, but they're still not selling anymore post the 17th of December. Your sense in terms of whether 2016 is going to be much more formidable in terms of FII flows?
Yeah, hopefully, it will be a better year than what 2015 was, because in 2015, the whole emerging market as a pack saw a lot of selling. So India, I would say got away lightly in that sense, because India was probably standing out within the emerging market pack. But there were a lot of outflows from emerging market funds. Hopefully next year will be a little better for emerging markets because of two things. One is we've seen a lot of this commodity pain behind us now. So the fact that oil has gone down, metals have gone down. Next year the downside may not be much, even if these things don't bounce back. And second is everybody was very worried about the Fed, and with all these events, the big worries in the run up to the event. Once the event is out of the way, people tend to forget it and get on with life. So that event is out of the way. The one thing which I'm a little worried about next year is what China does to combat the slowdown, because now it's very accepted that China is an economy which is slowing and probably will remain slow. But I am a bit fearful that at some point they do something to the currency in an effort to boost exports, and that sets off another round of competitive devaluation. So probably that would be the one overhang for next year's returns, what China does, and in case we get into this competitive devaluation phase, then that could spoil markets a bit for some time.
Okay, focusing on next week, Sudarshan, we've also got an expiry to contend with right in the last day. What's your sense? How is the market texture looking for next week, and where do you think we're likely to be by the end of next week?
Yes, see, the markets have been in a range. While we have seen a good week this as we end, but the range-bound market scenario still persists. I do not think next week is going to be different. So the chances are that we'll end up somewhere between 7750 and 7900 for the Nifty, up and down, which means we could see some rallies and see some pullbacks and eventually end up around 7900. That doesn't give much of an opportunity to traders for the next week. I would think that the real opportunities will come beyond 2015, when market participants again come, volumes pick up, and the Nifty will either go above 7900, 8000 and begin a new up move, or it will slide back. That will be the opportunity.
Okay. Sudarshan, do you expect a couple of these commodity stocks to do well into next week as well? For example, Hindalco, the likes of Ken, as well as Vedanta, all of them rallied a good 5 to 6% this week.
Yeah, I expect the metal stocks to do well next week. I can't speak about cane. It's commodity, but it's very different from, say, Vedanta and Hindalco. So the key picks for me next week, where I think momentum should continue, are Tata Steel, that's number one, JSW Steel, and Hindalco. If traders can focus on these three, buy them on intraday dips, take some profits, then re-enter on the long side, I think they could do well, because at least for me, the metals sector seems to be getting ready for an up move.
Yes, crude is headed for its biggest weekly gain, at least in the last 2 months. It's gained close to about 8.5% to 9%, both Brent as well as WTI. But Jyoti, in your earlier answer, you alluded to the fact that the commodity pain is behind us. So therefore, is it time to bet on commodity-linked names like Vedanta and Hindalco, considering that in 2015, they've lost nearly 50% of their market value?
Okay, I'm not very bullish on commodities. So I think a lot of the pain is behind us, in the sense that we've seen like all these commodities come up 30, 40, 50% in terms of their prices. So to that extent, I don't expect another 50% drop. At the same time, it's ultimately China is the biggest buyer of most of these commodities. I don't think the Chinese economy is going to accelerate. It's probably going to decelerate even more. And also within that economy, investments are really going to keep coming off. So to that extent, China is going to buy less and less of these commodities. So I think all these stocks are like trading stocks, in the sense, you probably get some bounces because a lot of them have come off 50%, so you can get them rallying 8, 10%, 15%. But beyond that, you're not really going to make sustainable money in these. And if, China does something like a devaluation or something, then again, these will go through a lot of pain.
Okay. Jyoti, let's just extend that point forward. In case China does undertake more measures in order to make the yuan more competitive in 2016. The recent news is that they've extended the trading hours, and hence they've internationalized it a little more, so that it would possibly trade during European market hours as well. If they get more aggressive on that in 2016, which are the stocks or sectors where we could see a direct impact?
It's one is what China does, and the other is what other people do. So like we saw an example in July this year, when China in some sense devalued their currency, or there was a depreciation on the yuan, and every country then decided to weaken their currency also. So in the end, China did not benefit, because most currencies became weaker. But otherwise, if you look at China, and they devalue their currency and no one else does the same, or let's say the Indian rupee gets much stronger versus the Chinese currency, then you will see some of these sectors where we compete with China start to do badly. It's like textiles could come under pressure, because China probably will start gaining a share. Tires is the other sector where there's a lot of competition coming through from China. The power equipment sector would be the other one facing pressure. So there will, the pressure would start because Chinese will get more competitive. My guess is, but if China devalues, then most other countries will also devalue their currency.
Okay, let's get in a few trading ideas then from Sudarshan. Sudarshan, one of the recommendations is Cera sanitary ware. Is that just a near-term call, or do you see sustained upside?
Well, I see some sustained upside. Much beyond a few weeks is difficult to suggest, because then it will depend on the nature of the market, how the broad market behaves. But Cera has gone through a deep correction. After that correction, it's moving sideways, giving us an attractive bullish head and shoulder pattern that tells that at least a relief rally or maybe a new uptrend is coming. In either case, for the next few weeks, there should be some momentum on the upside. And you are buying a good quality stock. So I'm not giving you stock ideas for the next week, where markets are likely to be range bound and choppy. We are looking beyond 2015 into 2016, and these ideas then go there.
Okay. All right, gentlemen, just hold that thought. We'll take a short commercial break, but as we do that, let's get in some market opinion that we've got through the week.
It's been a tough year, and I think looking at 2016, we're optimistic that will be a better year. See some green shoots, and I think those green shoots should hopefully build. And those green shoots, let's be clear, are not because of anything going on or not going on in Delhi. They're because of what's going on in the broader economy.
We don't have a mid-cap 100 or an index of mid-cap stocks, because the spectrum is too wide in the mid-cap segment, and it's more of bottoms-up kind of investment environment which works as far as the mid-cap companies are concerned.
I think the local economy is actually doing pretty well. There are some very welcome and heartening signs in the economy. So we are seeing very robust auto sales. We are seeing very robust oil sales. The 3-month moving average on oil sales is actually the highest we've seen in a decade. Right? So these are very heartening signs. The only weak sign right now is cement, but otherwise the indicators which indicate hard activity are all flashing green in my view. I think that the global linkages are the biggest concern. We are very worried about what's happening abroad. And unfortunately, the larger listed stocks are also much more linked to the world than they are to India. There are very worrying signs abroad. I mean, if you see the junk bond market, there are signs of the liquidity stress coming up. Commodity prices, if they fall below a point, like if you see the bond yields of some large metal companies, they are almost verging on the verge, and they're signaling massive stress.
There is a lot of faith and hope on the mid-cap story, and the prices looks to be a lot more stable. But I think the Sensex stocks will be a lot more volatile because they have a lot more linkages with global markets, sentiments, futures and options, etc. So that is, I think, a sector which is more at risk than perhaps 60% of the quote-unquote the mid-cap market, which is, I think, a lot more stable today given the widely distributed ownership.
CNBC TV 18, celebrating 16 years of business leadership.